Friday, May 14th. This is Sean at eMiniSchool. I just want to follow up on a video from yesterday. So yesterday we were looking at a 7-minute chart. Today we'll just look at the 10-minute so we can see the whole trade here. So we had a 7-minute sell and a 10-minute sell right here. Okay, we had first targets which came down into this zone for yesterday. We had a little bit of a bounce up. Today the trade continued down. What I wanted to show here was indicator high, we get blue bars. Okay, so at that point, we're going to trail the stop. Okay, and as it breaks lower and lower, we're going to keep trailing it down until ultimately we get stopped out of the trade. Okay, so looking at this in a couple different ways. Let's say that you didn't catch this short. Okay, and you turn your computer on and the bars are blue down here. Okay, indicator's high. So you missed the short, you just turn your computer on and let's say the bars are right here. You know instantly what not to do, which would be enter short. Okay, if the move is getting extended and we're gonna get stopped out of our short down in this zone, then we don't want to enter short. Okay, so I know everyone who has sites and everything that do what we do, they only want to look at the profit side of everything. And just to show how great the signals are. Okay, that's only one side of it though, because we really want to look at it in saving money as well as making money. It's not always just about how much money we can make. We really kind of approach it with how much money we can save without taking a lot of losing trades. Okay, so we want to really wait for the trade. Once it fires off, take it, have confidence in it, and hold it to the target. Okay, which this was, I believe, the live trade we did, where we tried to capture it live for everyone. No, actually, that was a different day. This was just from yesterday. So basically, if once we come down, make this low on a 10-minute, it's very high odds this is the low of the day. Just like if we made a high, okay, and the indicator was high, that's most likely the high of the day. Okay, same like right here, indicator high, blue bar, that was the high of the day. Okay, so we don't want to try to buy right here thinking we're going to break this level, just like we don't want to short here thinking it's going to break this level. And here's a good example why. Okay, it did break a little bit lower, okay, about a point lower from this low. Okay, but the trade is from here to here. It's not really so much from right here or shorting this low to try to get a little bit out of right here. Number one, this isn't a good trade. Number two, if we have blue bars, very high odds that this is the low of the day. So we don't want to re-short thinking it's going to break. Can it break lower? Yes, but very low odds of doing that. Plus, if you get in here, if you do try to short this, you're never going to short the high and get out the low. So there's really not enough points to really take the risk right here. Okay, so here's a good example. It breaks down, breaks this, and then it short squeezes everyone out of the trade right here at the end. Okay, so even if this wasn't the end of the day, let's say the blue bars were here, I'm still not going to short the low. Okay, if it could break, but it's probably going to squeeze back up. So I don't want to just look at it in one way as far as it's just about the profit. It's more about telling us what not to do in real time. And then it just goes into your own personal discipline of actually following what's on the chart, which is not easy. You have to learn that over time. You have to learn confidence in this signal once it goes red to actually short it and hold it. And all that takes a little bit of time. So just wanted to follow up for the Friday update. Show the blue bars. This is why we don't want to short after the blue bars. It'll short squeeze back up on everyone. Have a good weekend.